this is going to sound really boring, but I started my career as a tax lawyer.
I saw a great video recently about these agents that answer fraud phone calls and then waste the scammers' time, essentially. So we have like an AI voice that will interact with them. It's like tough grandma who kind of takes the piss and just continues on.
So a lot of our LPs will come to me and they've invested based on a barbecue conversation,
right?
And they've gone too heavy on one or two businesses and they've lost their shirt. And so they come in and go, wow, early stage investing's tough.
I think there's a kind of fine line between fake it till you make it, or a fine line between misrepresentations and just coming across very confident. I actually heard a similar story from an advertising agency before as well around that kind of model, right, to bring people. I think there's a scene in Mad Men where they do the same thing, and that's probably still totally okay.
I look at a fund as being a diversified exposure. You're playing the index, and then the syndicate is where you can pick and choose and bolster certain aspects of your portfolio because you don't have that autonomy on the fund side.
We have fantastic performance on the US markets, but Southeast Asia, it's a bit so and so.
Yes.
Of course, they're also really well performing assets, but not everybody picked them. Hello, welcome to the fourth episode of The Accidental VC, where we discuss venture topics of the day, oftentimes with folks who aren't naturally from the VC scene. I guess who is? Maybe first question, how did you get to VC investing, Jayden? We have Jayden today here with us from Investible, one of the OGs in venture capital in Australia, and excited to have you here.
Super excited to be here this morning, Milan, and thank you very much for having me on the show. So Investible, early stage VC, domiciled out of Australia. We also have an office in Singapore, which we've run since 2018. And the business here in Australia has been around since 2014 onwards. And so Investible started as an angel syndicate. And so Investable's founders, Trevor and Creel, they exited their business, got bored and started angel investing. And then they decided that they would all come together and form a syndicate to co-invest with their friends, essentially, and have more power behind their check because they had aggregated their funds and were able to source together, screen deals together, and invest together, which was really cool. So then that was formalized in 2014, and then Investable's fund business started in 2018. And so Investable's funds are all early stage funds, so pre-seed to Series A, and we have about 130 portfolio companies now, mostly in Australia, but also globally.
Interesting. What business did they sell? For those who don't know.
Yes. So, and it's fascinating when you talk to Trevor and Creel, they're true hustlers, true founder determination. And so their business, as they explain it, was effectively a call center business. And it started with just Trevor and Creel and then built up, and they exited that just before the GFC hit. To a large Australian institution. But seeing and hearing the journey that they went on, it's very similar to the journey that our founders go on, where there's the ups and downs, and there is a lot of hustle there, and slowly just building out the team. And so I think famously, Trevor and Creel tell the story around how they had one of their first clients coming in, and I hope it's fine me sharing this, but they had one of their first clients coming in, which was a large institution here in Australia, but their office setting wasn't suitable for that client to come in,
right.
Nor did they have the manpower or the personnel in the business to fulfill this contract or to be perceived to fill the contract. So what they did was they called in a few of their friends. They went into an office space that wasn't their usual office space, and they set it up to make it look like a big...
Look busy.
Look busy. But then they quite quickly grew into that. And so once they landed that contract, they were able to, bring on that personnel. And so, there is a bit of and I know people use this flippantly, but fake it till you make it. But I think a lot of founders these days, it's difficult when you're in an early stage business. You can't have all the boxes ticked that an investor wants to see or a customer wants to see. And you look at their journey, you look at the journey of founders in our portfolio, and sometimes, there's a little blurring of what's 100% true, but generally speaking, they were able to fulfill that contract and many others. And like our founders, they catch up very quickly to what they've said that they're at.
I love that story. I think there's a kind of fine line between fake it till you make it, or a fine line between misrepresentations and just coming across very confident. I actually heard a similar story from an advertising agency before as well, around that kind of model, right? To bring people. I think there's a scene in Mad Men where they do the same thing, and that's probably still totally okay. I think,
Yeah, definitely, because it's such a chicken and egg scenario, right? Where you need your first customers to start bringing in revenue to then reinvest in personnel, in office space, etc. And so at the time, and this is kind of speaks to how prudent Trevor and Krill were with the way they were running their business, because they didn't bring on external capital. So the business was self-funded. And so they didn't want to go out there and rent a super expensive office space, because they could reinvest that money better in, equipment and things like that they needed to run their business. So that's a story that I've, has stuck with me. And when I look at, the 130 odd founders that we've backed, definitely similar sentiments across that group too.
Nice. And on the theme of the accidental VC, are you an accidental VC, or how did you get into the space?
Yeah, definitely. And so this is going to sound really boring, but I started my career as a tax lawyer.
Okay.
Started doing transaction tax, so mainly in relation to private equity backed companies and offshore tax structuring. Did that for a few years, became a lawyer, and then decided, 3 volumes of tax legislation doesn't really get me up in the morning. And then so jumped across into a corp finance team, so doing transaction diligence, once again with private equity backed companies. And then when I was there, I realized that, when I was in the tax team, I was looking at the tax component. When I was in the corp finance team, I was looking at that component of the diligence. But then I realized I really enjoyed just reading all of the different lines of diligence. So reading the legal diligence, the tax, the financial, the commercial, etc. And so it was at that time that I realized I wanted to move into a career that was broader, where you would cover all of those aspects. And so then I tried my hand at my own startup, which was a phone fraud prevention platform called Verified Caller. And so this was at the time when COVID had hit, bricks and mortar shut down, your bank's calling you, your telco's calling you.
You get these kind
on
of
the
senior citizen scams.
Exactly right, yes. And Australians are too trusting.
Right.
And so some would call up, hey, Milan, it's Commonwealth Bank, there's an issue with your account. Can you verify yourself? Yeah. All right. What's your date of birth? Et cetera. And that's where phone fraud is the largest category of fraud here in Australia.
Interesting.
And so this was to try and target that. But long story short, did that for a year and a bit. It was a feature, not a product. And unfortunately, I didn't have the technical ability to build a solution that could stay relevant, because fraud, and particularly phone fraud,
sophisticated in itself.
Yeah. Exactly right. Yeah, and just going full circle on Verified Caller, we recently backed a company that has agentic is an agentic solution addressing phone fraud.
Right.
And so I looked at this solution now in 2025, and I thought, wow, there's no way Verified Caller, or what I was trying to build, could ever compete with solutions such as this.
What's possible now? I saw a great video recently about these agents that answer fraud phone calls and then waste the scammer's time, essentially. So we have like an AI voice that will interact with them. It's like the tough grandma who kind of takes the piss and just continues on and
yeah, exactly right. And that's what this company does.
That's what
it's called Aparte, and it's fascinating when you listen to these conversations, because it's one thing that they want to keep the scammer on the call, so they're not scamming other people. Yeah, to waste their time. Some of these conversations go for over an hour.
And that's fantastic.
Yeah, and then the other thing is that they want to, pattern match the questions that they ask, but then also try and bait them into providing information themselves. So they might give them like a fake bank account that they can hit, and then they can start triangulating where that's coming from. But yeah, it's fascinating, and the space of agents and just agentic AI generally is incredible. You have these agents that are there talking to scammers, and there might be they'll play a sound of a baby crying in the background or a dog barking, and sorry, can you give me a sec? I just need to go and check on my kid, or the postman's here, I got to pull back my dog, sort of a thing. So it's
super realistic.
Yeah, totally.
Very cool.
Totally.
Yeah, it's an interesting space. I mean, on this topic, where do most of these come from, the scammers, just out of interest? Are they local? Are they from Australia, or they come from all over?
No, it's definitely coming out of Southeast Asia and India, the scams into Australia.
Interesting.
Because you can mask numbers now, and then they're quite relentless. And so, telecommunication providers are blocking millions and hundreds of millions of calls literally every year. And so what this solution does is it says, which is very defensive, right? You're just blocking with the sports analogy, as opposed to getting out there and kind of smacking them back.
Yeah, getting them.
And so this gives them an offensive capability where don't block it, let them through, and let's engage with them.
Very cool. Yeah, I mean, on this topic, maybe we can dive a bit deeper into how you've seen the startup world change in Australia. So we naturally come from Southeast Asia and now have sort of starting to build an office in Australia, and obviously much more focused on later stage deals. Whereas you from Australia and you have an office in Singapore, and so we have a little bit of overlap there, and obviously we work on some stuff together. Yes. But I'd love to understand sort of from your point of view, how has Australia as a startup ecosystem or as a tech venture ecosystem, more generally speaking, developed over the time that you've been in the space, maybe even as a tax lawyer?
Yes.
What have you seen sort of over the last 10 years, how that's changed?
Definitely. And I've been at Investible for 4.5 years. And so that's in the thick of it in VC. But even before that time, I was investing in private markets. And so it has shifted dramatically over that time frame. If you look back at venture capital in Australia, obviously you have the large funds like Blackbird, Airtree, Square Peg, and they were really the forefathers of Australian VC. Also the likes of One Ventures and others. And so they've really carried the industry. But what's been great to see is there's been a layering of kind of mid-tier funds, smaller first-time fund managers, but then really importantly, angel syndicates and other investment syndicates joining the party. So looking back, you didn't have so many parties in the ecosystem from an investment point of view, so you didn't have as much optionality as a founder. We still don't have the specialization of fund managers that you would see in the States or North America, Europe. Generally. So you will get a lot of generalist investors here, but we're starting to see more specialization. But I guess if you look at venture capital 10 years ago and venture capital today here, obviously a lot more capital has been pumped into the space. There's a lot more optionality out there in the market. There's a great layer cake that we're starting to see emerge where you can go to kind of a smaller fund manager and then have a larger fund manager come in kind of Series A plus. So it's been really great to see that evolution. I think it still is quite nascent relative to North America, and we'll see that to continue to evolve.
Interesting. And on the companies themselves, I think most folks who are familiar with the space know Australia as a kind of SaaS capital in the Far East or down under. But are there other categories that you've seen emerge? I mean, you talk about agentic, AI-driven businesses. Obviously, is now a topic everywhere. But have you seen are there some other categories that you would say? I mean, firstly, would you say SaaS is still the number one? And also, what are the other categories that you see emerging that you think also make sense and you're passionate about over here?
Definitely, SaaS has historically been a big focus of Australia, and in fact, a lot of markets, right? That was very popular, particularly with VC money. With AI now, I know our pipeline from Australia, 30 to 40% are AI first solutions. So that makes up a big chunk of the pipeline. I think the struggle with AI and Australia is, we still are a relatively small market. And so anyone building an AI solution here in Australia, you want to be global from day one. Also, the depth of AI talent here in Australia is relatively shallow. And I say relative, that's relative to North America and other markets.
Yeah,
and
China,
so,
India.
Yeah, exactly right. And so when there are successful AI businesses here in Australia, they've gone global early. So I think that's really important. But your question around what other industries, what I've found super exciting, and we've been fortunate enough to back businesses in this space, is deep tech and critical tech. And I really do feel that Australia bats above their weight in those areas. And so right now we have a thesis around, an internal thesis at Investible around the infrastructure layer. So all around enhancing classical compute. And obviously the AI arms race continues, and one limiting factor there is Moore's law around the capacity of classical compute. And so we've been able to back some businesses that are addressing that issue and looking to enhance the amount of throughput that can be put into semicon and things like that. And so that stems from the fact we have a great university system here in Australia. We have many universities. There's good R&D funding schemes here in Australia. And so we've seen a lot of great deep tech or what I call critical tech too getting spun out of those universities.
Interesting. And maybe circling back to what you said earlier about syndicates coming into the mix, I think that's an interesting topic. Generally speaking, also obviously you guys run funds and syndicates, and there's a lot to unpack there. I think it's an interesting piece also from an investor's point of view. Am I better off investing in individual deals? Am I better off investing in a fund? We have the same kind of thing going on in our platform, where we have some folks are really backing themselves, that they want to do individual tickets into companies. They want to play their own judgment. They want to play out their own thesis. Whereas other people are like, hey, look, I don't want to keep sending you all these small checks so frequently. I'd rather just give you one larger check and let the professionals handle it. It's a good question. Who's the professionals? It always takes a while to figure out who's really good at the judgment thing. But in Australia, what do you see? How that space has developed, and what are the benefits of syndicate investing versus fund investments or LP investments from an investor point of view, firstly, and then maybe later we can also go into what it means for the companies.
And so I might take one step back before answering that question, and that's just structured investing, whether through funds or syndicates. So a lot of our LPs will come to me and they've invested based on a barbecue conversation,
right,
and they've gone too heavy on one or two businesses and they've lost their shirt. And so they come in and go, wow, early stage investing's tough. And it is tough, and investing generally is tough. It doesn't matter what the asset class is. Everyone's trying to generate alpha. And so what we find is that structured investing is really important, because I know at Investible we see over 4,000 deals a year, and we invest in a dozen or 2 dozen of those. And so I think it's important to have that structured environment, whether it's in funds or syndicates, and that's what it provides. And so there is varying levels of syndicate support, and there's varying levels of fund support, I guess too. So that's the kind of the broader view that I have. And so I think that the place in the world for funds and syndicates is really important, just to limit the field and provide that structure for investors, particularly early stage investors, but also later stage investors too. Greater access, that you get for deals, but then that information asymmetry is really narrowed too, which I think is important. And then when you look at funds and syndicates, the place in the world for both in my mind is really pertinent because they do offer different things. And so I look at a fund as being a diversified exposure. You're playing the index. And then the syndicate is where you can pick and choose and bolster certain aspects of your portfolio because you don't have that autonomy on the fund side. And so I know at Investible, with Club Investible and our funds, that's a really neat combination. And so I know a lot of our investors, they will invest in a fund, but then the real enjoyment of investing comes through picking and choosing on the side, but not going too overweight on the picking and choosing, that you always have the index play to ensure that your returns will be there. And so, most definitely, I think there's a great interplay between both. I don't foresee a time where there would only be one, not the other, because I think they really do interact very well together.
In your business. Yeah, that makes sense. And we look a lot at the data in our platform, and it's interesting. Have you done the analysis to check if the average of Club Investible, the average performance of Club Investible, how does that line up against the performance of the funds? I suppose is one interesting question, and then the other piece is around the divergence of performance between certain investors. We found a lot of interesting data in those. In those numbers. So love to hear you.
Definitely. And there is a massive divergence on the investment syndicate side because people are going heavier into single assets. And so naturally, some are going to go well and some not so well. And so we do see that spread being quite significant on the syndicate side. Interestingly, when we do that analysis, we see that the liquidity time frame is a lot shorter on the syndicate side. And so I think this is one attribute which is really neat between funds and the syndicate is the syndicate, based on the data, you can generate shorter term liquidity, which is helpful when you have a longer term hold on the funds.
And that's because in subsequent rounds, when companies are doing well and growing up, a syndicate is more likely to be taken out by a larger investor, or is it more that people trade within the syndicates, or what's the sort of dynamic that makes that happen?
Yeah, you hit the nail on the head with liquidity options. So given that it's in a syndicate and not in a fund, and generally speaking, funds will maybe have larger exposures or more restrictions, there is more liquidity options there. Trading within the syndicate too is another option, where if you're a fund, you can't trade within your fund. So definitely that. But then also what we see is around when the syndicate may enter into a deal. And so I know that particularly when you're looking at early stage investing, a lot of investors, definitely not all, but there is that cohort that says, okay, I will invest in an early stage fund to give me an early stage exposure, and then I'll invest through a syndicate when those businesses mature a bit more, and I'll pick the winners out of that early stage cohort and go a bit heavier on those winners to try and generate those power laws.
Interesting, makes sense. Yeah, the other pieces around. Have you seen specifically if the funds perform? Have you looked at the aggregate portfolio data of the syndicate? And there's one syndicate? There's Club Investible, which is, I suppose, one. You could look at it as one block.
Yes.
And then you have several funds. Have you seen significant differences in the performance? If you can share.
No, definitely. It's a great question, and I think because of outliers in the syndicate, such as Canva, the syndicate performance is quite significant. And also with the syndicate side, it's complicated because if you took certain cohorts of syndicate investors, the returns would be very good, and then other cohorts not as good. But if you do look at it, and we have done analysis over that time frame, because of those outliers, the syndicate has performed better, which I guess you would expect if you're talking about an index exposure, and then also a more high conviction exposure on the other side. But if you were to strip out those outliers, you would see that the difference between them both is negligible, and the performance is fairly good. However, you would have to take out the outliers at the bottom of the syndicate too, and the top of the syndicate. So it would be more middle of the range, because there definitely is, unfortunately, people that pick and choose into the wrong companies or go a bit heavy.
Yeah, so that's the challenge, right? I mean, not everybody's invested in the outliers.
Yes.
So that's the challenge from an investor point of view too. It's not easy to have incredibly good judgment. We see on our platform as a maybe interesting point to this conversation that there are some folks who do fewer deals, but they do seem to have very good judgment. So we're even thinking of doing this sort of. I think Robinhood has a feature where you can follow on trading, right? So where you can say, look, I want to follow this guy, or even setting up sort of fund pockets that follow certain investors. Of course, we need to discuss with them first, and like the comfort levels and so forth. But that's really interesting. I mean, we're also seeing on our fund side, it's a much more kind of stable performance, generally speaking, in terms of markups. And there's a diversified portfolio versus the syndicate. We have a lot more deals in our syndicate versus the fund. So the fund is much more narrow in terms of exposure, and For us, I'm not sure it works the same way, actually. I think if you look at US deals, we have fantastic performance on the US markets, but Southeast Asia, it's a bit, so and so.
Yes.
Of course, they're also really well-performing assets, but not everybody picked them. So we see sort of both. We see some folks who said, look, I've invested in your fund, I'm looking at what's going on in the market, and now I feel ready, and then they only start to pick individual companies based on the thesis that they've seen play out in the past, which I'm also not sure always will work, right? Because times change. And we see other folks who've done very well out of a syndicate, generally speaking, but at some point get, lazy or too busy, and then don't want to play that anymore, and then just put into the fund. So it's an interesting dynamic. What do you think this means for founders, and how has that sort of worked in Australia? Do founders prefer to get a fund to sort of have the brand name? And is there also a strong affinity towards working with syndicates? And I guess there are multiple syndicates in Australia. You guys are probably one of the biggest, as far as I'm aware. But there are also other syndicates. How do founders, especially I would say the ones who can get venture backing, what is their attitude towards syndicates and sort of the mix of taking institutional VC money versus syndicate money?
I think their attitude towards syndicates has changed over, we're talking about 10 years ago in Australian VC. It's changed in a positive way. And so just like we were talking about funds being a passive investment exposure, it's passive too from the LP, that they don't have direct access to the portfolio company. And so the real benefit we find with the syndication is that they're putting in their own money directly through our vehicle, but they're putting their money directly into that company essentially. And so a lot of the times that will be because they have a particular affinity to that company or particular expertise in that area. And so a natural flow of that is that they will then want to connect with the company, or the company would want to connect with that individual to have a conversation, to tap their networks, to tap their expertise. And that's what I think the real value of a syndicate is. It's the power of those individuals and the fact that they've felt that they've put their money in directly into that company, and so they're more inclined to, wrap their arms around that company and support that company, which is a bit different in a fund, because a fund, you have, that diversified exposure. You're not necessarily backing an individual company, you're backing the manager to pick that portfolio. And so I think that's a really interesting nuance, and that's where I feel that founders are starting to recognize,
the value.
Yeah, exactly right. Not just capital. And I know everyone speaks about that. And funds do add not just capital, but you can't beat someone that's had 30 years in the industry, semi-retired or is still in there or fully retired.
Yeah,
but they have all that expertise. They're willing to put a check in your business. That's invaluable to be able to get in a room with them or tap their network. And I think that's the true value of syndicates from a founder's side, is not just being able to, diversify from a capital perspective where that funding's coming from, but more importantly, to get that access to that expertise and that sort of access to those individuals.
Makes sense. Yeah, we see similar things happening in Southeast Asia, and I think it's really important that especially successful founders, I think, can be a really great resource for starting founders, right, who may have been through it before, and or just in general the industry expertise, as you mentioned, that you have some, and it doesn't necessarily need to be gray hair, but folks with a bit more experience and understanding of the industry and network and so forth. And you're right, I think syndicates are much stronger route there than funds, generally speaking. Although on the other hand, funds have deeper pockets and also, I guess, more of a shiny object on your cap table, right, from a founder's point of view. How does, on this topic, the regulator in Australia, what have you seen? And we have some high level understanding, of course, due to our setup here. But what is the regulations and how have what are the regulations like and how have they changed over time? From what you've seen in terms of syndication, of what they allow, what the rules are around syndication in Australia. I'd be interested to understand that better and perhaps relevant for the audience.
Yes, there's still a relatively high threshold for a sophisticated investor to participate in a lot of these opportunities. But then we saw the emergence of crowdsourced funding, which was targeted at not wholesale or sophisticated, but retail. Look, I definitely buy into the vision of democratizing access to private market opportunities. However, I think it needs to be done in a structured way. And so crowdsourced funding was introduced to provide that access in a structured manner. It has had mixed results if you look at the performance of crowdsource funded opportunities. And so I think that's still an evolving model, the retail side. And so I think over, if we look at North America and other markets, that retail base has been tapped a lot heavier and is a lot more mature, those structures around it. And so I think we'll see that Australia evolve more in that space over the next 5 years. In the wholesale and sophisticated investor space, as I mentioned, it is a high threshold. But in saying that, the regulatory frameworks are quite clear. And so either you meet those thresholds and you can participate and then the market's quite, clear and flexible to operate in, or you don't, in which case then you do have much more limited options. So it is quite binary when it comes to access to private market opportunities with those two dynamics of whether you're retail or wholesale. But that's common not just to Australia, but other markets, but it's just the lack of maturity that we have with the retail aspect.
Makes sense. Yeah, so either you can or you can't.
Yes.
Kind of thing. And have you seen more syndicates emerging and also disappearing? And what do you think are some of the dynamics that play into this?
There's been a lot of new syndicates emerging. And so we've seen syndication platforms enter the market, which make it very easy to spin up a syndicate. And so these are smaller syndicates that may have particular focuses. And so I think that's really great that they're providing that specialization that maybe funds don't or more larger syndicates don't. And they're also helping to kind of go deeper into the market and get individuals who may not ordinarily have joined a syndicate. And so, yes, we have seen multiple other syndicates arise. There still is varying levels of support that syndicates provide. So, Milan, I know your syndicate provides a lot of information. You get great access, but that's matured over time, right? And so I think, like any newcomer to a market, it takes time to build networks. It takes time to build access. It takes time to build the apparatus to, put forward good deals and put forward the right information. And so, once again, speaking about maturity, with a lot of these new syndicates in market, they will mature over time, access will become greater, and then they will become more valuable to their participants. But it does take time in market. It does take relationships. And that doesn't happen with just registering yourself on a syndicate platform and spinning it up overnight. That takes years and years, as you're well aware.
Yep. It's not easy to get it right. And maybe as a final kind of thread to go into is, What do you think is important to pay attention to for, let's say, an angel investor who wants to enter the space, and in particular, perhaps folks who are, in Australia, but also outside of Australia, who might want to invest into Australia? So we've, for example, done, I think maybe 5 to 7 Australian deals, largely through our Southeast Asian base, and sometimes lucky to have connections like yourself to bring us that access, or other folks. And what do you think is important to pay attention to that one might not be aware of if you're coming from the outside in to Australia?
So Australia remains a bit of a hidden gem because it's so far away, geographically speaking, and there is an arbitrage play between Australia and other markets when it comes to valuations. Yes, but what's fundamentally important is that those businesses don't get stuck here in Australia, because if you want to get that arbitrage, well, they have to go into those other markets where the higher valuations are achieved. And so if I'm outside investor looking into Australia, well, then I can look at notable examples, such as Canva, such as Atlassian, such as Airwallex, Deputy, etc. All of these, Safety Culture, and the list goes on of all of these unicorns coming out of Australia. And Australia really does bat above its weight when it comes to unicorns per capita, which is excellent. But like any market, to get access to those deals, you don't want to kind of shoot for the hip as an external investor. You want to build relationships with those people on the ground, and so you get access to those deals, because a lot of those hot deals, they get filled quite quickly. And so it is around access and understanding the market. But then I think what's really important here in Australia is they need to be global businesses.
Right.
You need to see that path towards moving into other markets. And so what that means is, often if you're investing in Australian businesses, you'll get in.
You're not just looking at the Australian market.
Exactly.
How important is, that's an interesting point. How important is it that when you look at an Australian business, that it has an Australia play, or is it really kind of global from day one?
Yes, and so we see a lot of people validating here in Australia. It's a very great market to validate your proposition
for the Western world, right?
Exactly right. Really good, fiduciary structures and regulatory structures and incentive structures. So great place to start. Some founders decide that they'll be based here, but they'll go global from day one. Other businesses don't lend themselves to that, or the founders want to, build a business here and then export that externally. And so when we're assessing a business, we will look at that. So, if they're starting out here, how big's the market here in Australia, but then what's your next market? And so we're always thinking with these businesses, when are they moving into that next market? And we will do a full exercise of, the capital requirements to move into those markets, how big, the TAM is within those markets too. And so I think, unlike if you were, an Indian business or a North American business or whatever it may be, where, your market's your market and you can build an extremely large business.
Yeah, at home.
Yeah, exactly. You don't have to think about this. But here in Australia, the vast majority of VC-backed businesses need to look at external markets, and they'll move there very quickly.
And US is a sort of prime export market, I suppose, for Australian SaaS. Yeah, are there other interesting directions that you've seen in the space?
Yeah, North America is naturally the market that a lot of people gravitate to, and it's not just because it's a large population and it's deemed, it's a Western market. It's similar to Australia, but I think there is a slight naivety there with people thinking that you can just export the same product from Australia and the same go-to-market approach, etc., from Australia into North America, because as we all know, each state in North America is different. So, your selling approach has to be different, etc. And so, yes, we do see a lot of founders naturally being pulled into North America. Also, the depth of the capital markets in North America are helpful,
yes.
and so that is a key focus. Also, liquidity is also an important consideration too. And so, North America, number one, but then also Europe, or looking at Southeast Asia, moving into Singapore, and then looking at other kind of countries within the region. But it does depend on what area you're focused in. But generally speaking, we do still see North America as number one. I know Europe has been complicated in the past because it is highly fragmented too. And also there's varying regulatory requirements. But, I think we're starting to see that a lot of founders are, looking at other regions to move into too. So, having variety is good and optionality.
Makes sense. Yeah, I think... well, thanks for coming, Jayden. I'm running out of questions, but this has been very, very helpful, and I'm sure useful for the audience. Hopefully we can do it again one day.
Excellent. Thank you so much, Milan. It's been a pleasure working with you. And I think something that's really resonated with me is just how open you are to work with other parties and, very much have the belief that we're stronger together. And I think that's really unique in market, and it's really valued on our side. And I've thoroughly enjoyed working with you and learning from you on this journey, and we've done some really great deals together and looking forward to more. I think we have a couple in the pipeline, which looking to close out in the next few weeks.
Thank you. Very kind words, and totally reciprocal. Excited to do more together and do more here in Australia. I'll see you again very soon, no doubt.
Thanks, Milan.
Cheers, mate. Well, thanks for joining us for the conversation with Jayden from Investible. Make sure you follow us on YouTube, Spotify, and whatever other channels the team is planning in here. And we'll see you again for episode number 5.